Hello, hello. Welcome, everyone. I see a bunch of people trickling in, so we will give it a few seconds here. Welcome to August, the end of summer for some of us, depending where you are. We will see what happens. Welcome. All right. Well, since we're recording this, we'll get started since we have so much to cover in an hour. This is so exciting. Two great, amazing angel experts here to talk about building a new angel group. So for those of you that don't know me, I'm Margaret Batchelor. I'm Director of Educational Initiatives for the Angel Capital Association. And certainly we welcome you throughout this session to introduce yourself in chat, introduce your angel group, share your LinkedIn. We're here not only to give you education, but to build a community of practice and some camaraderie as we go through our topics and educate you more on angel investing. So today is a super exciting topic because we're introducing a new content piece and a new experience that we have for current angel groups or those of you seeking to bring an angel group to your community. And we have a toolkit for new angel group formation to help you do all this, which is wonderful. And we will show you how to find it. Just a refresher, we're the Angel Capital Association. We're the largest professional society of accredited angels investors. We get together like this virtually. We get together more often face-to-face. We have virtual programming coming up with Angel University. We're working on our Angel Funders report right now and doing a tremendous amount of advocacy in DC for those of us interested in early stage investing. To get value from this webinar, yes, it will be recorded. We will send out the recording to you. And if you have angel group members in your group that aren't live today, they'll be able to access it through our ACA webinar archive. Wanted to thank, before we start, the amazing sponsors of the Angel Capital Association. It's all these great organizations here that allow us to bring this programming to you and bring the content and be able to support the early stage investing community. So a shout out to all our sponsors. Thank you. Just a friendly reminder that while today is really focused on starting an angel group, or maybe you're starting a new angel group and have a bunch of new members who are new to angel investing, we will be starting again mid-September our Ann and Bill Payne ACA Angel University program. These classes for the fall are Tuesday evenings beginning at 5 p.m. Eastern time. They are live, but they are recorded. So I have a lot of people say, hey, I can make 3 classes. I may miss 1 or 2. If you sign up for all the classes, you get all the recordings, all the materials for all the classes. So you are still eligible to earn the certificate either in Basics of Angel Investing or Advanced Angel Investing with our deeper dive classes if you do access a recording. And so certainly we have that information available and you can follow up with me regarding Fall Angel University. It's coming to you soon. But our exciting announcement today, we'll do a dump and drum, I'll bang on my desk here. A drum well, please. We are introducing, and it is live and downloadable here on our website, Angel Box Basics, a guide to forming an active, vibrant, and successful angel group. We could not have done this without the vision of Elaine, our first speaker here, who will tell you about her experiences and her genesis, Christina and her group, who's added a lot of content, and the funding to pull all our content together and get this professionally organized and out to you is courtesy of VentureWell. So a shout out to them. So feel free to download that, follow up with me with questions. It's an interactive PDF. We also have some other documents and worksheets that we're working on, and stay tuned because we're working on part 2 as we speak. But really, as we go through this and we have Elaine and Christina discuss their own angel group formation journeys, really the way this template is built out is in these 4 buckets. Pre-formation, which is a lot of strategic planning, how your group can come up with an investment thesis, what type of organization you want. So we have organization nuts and bolts. We have angel fund nuts and bolts, which is different than an angel network. All this is explained in the book, but we'll certainly explain more as we move on. And then the final chapter is just a brief intro into deal and investment management, because to quote Elaine, you will spend more time with the founders after you invest in them than you did before. So we just want to make sure, even as you start the group and start investing, you're aware of governance and how you want to follow up and mentor the founders that you're supporting. So you can certainly jump around. I mean, it's designed to be read in chunks, but certainly if you want to sit with a cup of coffee for several hours, have a great time. But if you need to chunk it out, it's all the chapters, and the chapters link back and forth to each other. So we really want to meet you and whatever time frame you have to work on this. So super excited to have Elaine and Christina here today. They have both done what a lot of you are seeking, which is to start an angel group and also maybe to start an angel fund. So I think what's great is a lot of the genesis from Elaine was, gee, here's all the stuff I wish I knew when I started. And so we tried to download both Elaine and Christina's brains and some of our other amazing board members and angel group operators into this document. So I think we're just going to start with some of the journey that Elaine and Christina had. I know a lot of you sent questions in advance, so I have those questions ready to get primed, but at the same time, we're trying to keep this super interactive. So I'll certainly start adding your questions into the chat and we'll get to them shortly. I think I will stop my share so we can see Elaine.
And Marge, there's a request to share the PDF. Has that already happened?
Sure. Yeah, I can. Yeah, you know what? I'll put the link to download into the chat box right now for everybody.
All right. So do you want me to kick it off, Margie?
Elaine, tell us your angel journey story.
Well, before I do that, I'm gonna make a little segue and talk about how AngelBox really developed. You know, I was fortunate enough to spend several years on the board of the ACA, and one of the most frequent questions we would get from members, from potential members, was, all right, how do I get started? How do I start something? And you know, after several years of looking at that, we knew we had all this expertise inside, people like Christina, people like our incredible board, people that we've got on this call. We've got Scott Jacobs, I know, and I saw Kevin Leonard on the call. We had all this expertise, and the question is, how can we do this in a cogent form and get it really available for our members? And that really led to the development of this first document, you know, that you now have accessible. What we tried to do is, well, each group is different, and in a minute or two, Christina and I will talk about how what our journeys have been at various points in time, and we'll talk about it in sort of three things. How did we originally get started in terms of structure? How do you engage members, which I know is always an issue, and then how do you sort of really have a group that's running? We really wanted to gather templates, gather a format so you could begin to think about the issues, ask the questions about what we're doing. And we're hoping that this document does that for you. And what we'll add as we go to sort of the next phase of this is any questions you have or things you don't have. We tried to gather some good examples from some of our leading groups, but it really is meant to be an active tool, not sitting there and just reading. If you use it, go into it as you need it. You know, think of it as a recipe box, and you want to make another piece, and how can you sort of learn from the best and then ask the questions. I'm just thrilled that it's finally in the form it is. This has been a labor of love for 2 or 3 years, and it's actually really terrific that we, you know, now finally have it out. Now that you use it, we want the feedback to make sure we can make it better. I'll take just a couple minutes and talk about my brand. So I basically started about 13 years ago. We started RTP Capital, which was an angel network. And I happen to be in Research Triangle Park, North Carolina. You know, that's Chapel Hill, Raleigh, Durham. We have all the universities, we have all these startups and everything else. But post the Great Recession, we wanted to get back into angel investing. And we started this we originally started that as an angel network and then grew it. About now 2 years ago, Mark Friedman and I, who are really the sort of anchors of RTP Capital realized that things were evolving. The community has evolved. And in addition to having a network where, of course, we come together, but each person made their decision on their own to invest, that having a fund which would allow us to have more concentrated capital, move a little bit more quickly, and allow our members to diversify, which was a really key thing. You've heard that in any ACA course you've taken, that having a diversified portfolio was the key to success as an angel investor. And what was fascinating was in building RTP Angel Fund, which actually officially had its first close just last week. So we are very excited about this. And that I actually went back and used a lot of the tools. And then I have 3 or 4 partners that we built this fund with. And one of the funny things that occurred was, as we were just getting ready to sort of really push it out, and Margie had sent out the first notice about AngelBox, suddenly I get this note from some of my partners saying, "Oh, have you seen this? Have you heard this? Isn't this a great resource?" And I just sort of started to laugh. But, you know, some of the things we really thought about, and this is really important, we had the network, we were trying to figure out what was going to happen to the network and what we really wanted the fund. And we wanted the fund, uniquely in our case, we wanted to be the first investors in. We want to be able to write term sheets because we know how important it is to write term sheets. We wanted to think about, to what degree was it going to be for our existing members? For what degree was it going to be for new members? We actually combined 2 existing groups that were in the RTP Capital and Triangle Angel Partners, which had been a fund and did not want to raise another fund. And then we wanted to also bring in, and this is a real goal of ours, is bringing in new investors. So we spent a lot of time on that first section of what do we want to be, what kind of deals do we want to do. There were really 4 of us originally who were really good friends, and then we added a couple others, and we also brought in a professional fund manager, because one of the things we realized is you couldn't run on an all volunteer basis, which is what we had done with RTP Capital. So, you know, recognizing all of those issues, and in spite of the fact that I think among those of us, the 6 founders, we have way over 100 years of angel investing experience across networks, across funds, we still realize there's things we didn't know and resources, and we actually tapped into some of the stuff that was in the document in AngelBox as we formed this. So, Christine, do you want to talk a little bit about your sort of startup?
Sure. And I think that's the key word, right? All of these, whether you form a group, a network, or an kind of a full fund, which are very different entities, you really need to think of yourself, in the seat of the entrepreneur when you're first getting started, because you are out there fundraising just like they are. And there were lots of questions before this on just, how do you recruit members? That's the big question always, right? And I think there are lots of good tools in the Angel Box, but also Elaine and I can speak to some of the strategies we've used. But 10 years ago, we started the Jump Fund, our first fund, as in jump in, not junk. And it was really, I'm also in the Southeast, I'm in Chattanooga, Tennessee. It was really looking out in our backyard and not seeing any other women in the space. So we didn't see women as investors, and we didn't see women getting investments as startup founders. So we set to change the game. A lot of, my 7 partners are amazing. So gathered a group of 7 amazing women across a lot of different areas of expertise, which is really critical, I think, in forming your first fund, is getting that right team, just like our startups, having a really good, strong team with a variety of expertise. And as Elaine said, she has a bunch in her group who already have a lot of angel experience. We did not have that in our group. So it was drinking from a fire hose when we were learning about this. So we spent the first about 6 months really just learning before we even started fundraising. And the first place we went was ACA. attended our first summit 10 years ago in DC with another one of my partners. And then we also, some of you may know Golden Seeds, and Golden Seeds was really kind of we were a corporate affiliate of theirs for a while. And really, they took us under their wing. They are also dedicated to just investing in women, and I have mainly female investors. And they also had a good sort of intro angel training program that we use in addition to the learnings we were doing at ACA. So all of our partners went through their program as well, just to really learn how they did their process. And we have used a lot of things that they had for us. They have a very rigorous process, as many people know. So we got started. We went to all the ACA summits. I took every course I think that has ever been offered, and continue to take them because, you know, you're always evolving in this. Now I'm focused more on like getting these things over the finishing line and exits. We did a second fund after that first small kind of really a proof of concept fund. And then we had one local angel group here that it was also kind of mission focused and investing in Chattanooga-based companies called the Chattanooga Renaissance Fund. And we really cookie cuttered our first fund after how they had molded theirs, just to kind of have, you know, some idea, just, you know, legal and all those things, how to form it. So we really didn't we didn't do anything very unusual or different. It's a pretty standard fund format. It's called a 2 and 20, which is, you know, 2% management fees and 20% carry to the general partner. That's outlined in the Angel Box as well as some of the different structures you can have. So that's how we started. You know, with our second fund, we obviously knew a lot more. We didn't know the first time. So but it was, you know, it's hard to start your first fund. And so I think what ACA gives you as an organization, it gives you that network of people who've already been there and done that, right? And now we have this amazing on paper, and it's so easy to read through. I mean, there are clickable links throughout. It's very easily digestible. Obviously, it's the kind of just tip of the iceberg. So you want to dive deeper into some aspects of it, but it really gives you just, you know, worksheets to kind of just pencil through. How are you thinking about that? How are you thinking about your vision and mission? How are you thinking about your pitch? How are you going to do due diligence with your particular group, right? Because you got to spread the wealth. Everybody needs to pitch in somehow, particularly ours. All our GPs do it for the carry. So we are not paid. We do it on a volunteer basis, but we work for the carry. And then we have one part-time paid fund administrator. But with 2% management fees on two very small funds, we cannot afford any more staff. So, you know, just kind of do some of the economics going in, test the waters with potential investors. You know, it just really is a good guide to start walking you through that. And then, you know, deep dive on some of the subjects at ACA through the Angel University. But that's really how we got started. Then I went in with a group of other women who launched what's called Next Wave Impact Fund. So that was a group of women across the country who had been introduced to through ACA. And we were all either leaders of other funds or networks, or we're pretty seasoned at that point angel investors. And we got together and formed what was like a general partner of that group. But that group was a very different kind of fund. It was a fund structure, but it was structured so that all of the LPs, all the investors in it, really were engaged in the vetting and the diligence process, which was different than Jump Fund, where it was run by the general partner, and really our LPs aren't engaged in that. We touch point with them a couple times a year. We send out quarterly letters. But the Next Wave was really a learning vehicle for women to join a group and really learn hands-on. But we were virtual, and we were using Zoom way before the pandemic, because we were all across the country. So we had all our pitches on Zoom, and we had all of our gatherings on Zoom, except for the once a year pre-ACA gathering we would always have. So those are two groups I've been involved with. Both were fund structures, but both operated really differently. And so there's just this wide variety within angel organizations that you can take. The reason we both chose funds is, well, a couple of reasons. One is women, just recruiting women for the first time who have not been angel investors before. They seem to be more comfortable with the fund structure often, some places not, but and also just herding cats. I always say. Like when you have a network structure, unless they are super engaged network members, it is really hard to gather the checks, right? Everybody's really interested. They'll come to the pitches, they'll be rah, rah. And when it comes right in the checks, it's not coming. So, you're just like, come on, people, we got to get enough to have it be meaningful to the entrepreneur, and maybe create an SPV or, special purpose vehicle. So anyway, just to say that there are lots of ways you can go about this, but this tool is so excited. I've been really, it's been wonderful to be a part of building it. And VentureWell just took it and made it a whole wonderful, very approachable thing that I'm not sure Elaine and I had. There's a vision, but we couldn't really, they helped us really pull it together. So we would love your feedback, I think, on this. Definitely, we want to fine tune it. We are going to put a lot of aspects of it, that will be kind of like next versions that will be more sophisticated. But right now, I think it has a lot of good intro content that could be meaningful for any group. So 2 things I would say to anybody thinking about starting an angel organization: become a member of ACA. Yes, I am on the board, but I mean, seriously, it was the best thing we ever did, was to have that membership. And then all of your LPs get access to it as well as a group, for your whole group, for one fund membership. And then read through this. I mean, just go through every piece of this. And as Margie said, you can jump to the topics that are more relevant, but really, I think if you take it step by step and really do the worksheets, it would help you to solidify, why you're doing this and how you might go about doing it. So Elaine?
Well, if I can build on that, I second Christina's comment about, the ACA. It's the best way to get connected, to ask questions, and, you'd be sort of, what we're hoping is that you will learn from all of our mistakes and you will make new mistakes. And then the next version will correct those new mistakes. It's also important as you start out that you understand the community you're operating in and there is a competitive environment. So, think about what else is available in your marketplace. Christina was talking about there weren't really a lot of opportunities for women, when she first started out. Here where I am, we have a lot of relatively early stage venture funds, but those funds have, for example, very large minimums, the $250,000, $300,000. Which is more than many typical angels originally want to put in. So understanding what is there, understanding what your community wants. We took also a little bit different. We are not a GPLP structure. We are a membership-based structure. So when we talk to people about creating the group, we have a very strong community inside RTP Capital. And everyone said, I want to do the fund. I understand for all the good reasons why we want to move to a fund, but let's not lose our community. So we structured it a little bit differently in terms of what the minimum participation would be and people's appetite. So you could join our fund with only $50,000 spread over 4 years. Because one of our goals was to bring in new angels. That was really, really important to us. That might not be as important for other markets, but you really have to know and see what does your market really want. This is Christina said it so well, it is a startup, and so you've got to know who's your market, who's your competition, how long is it going to take. I know there was a lot of questions about, how do you get people into the fund? How do you do it? We started out we had 2 big assets to start with, which was the RTP Capital membership and the Triangle Angel Fund prior investors. But we created a master list of in our case, we had about 200 names on it of people we all knew. And we would have a weekly sales call, basically Friday afternoon, stand up. Where are we? Who's contacted? And the first thing was to get all the RTP Capital members in. Fortunately, that worked. but we had a full pitch. We had several, and you've got to find line because you can't do a general solicitation because you don't. And remember, the SEC is controlling your life when you do this. And that's something that a lot of people don't realize. So the cheapest way of doing a group is making sure an attorney, a good corporate attorney who knows this is part of your founding team, so you don't have to pay them. But making sure you do that. You can have informational meetings. We did invite, because RTP Capital is still running, we would invite people to see the meetings in action. We provide, we actually, our carry ranges from 7 to 20%, depending on the number of units you have and how successful the returns are over time. Again, to try to manage those expenses and try to incent people to buy more units. We have a minimum of $50,000, but we are trying to get more people to, you invest more. We also did the math like Christina did in terms of trying to figure out how many people do we need to make this group viable and be able to support. There is an infrastructure, there is a cost to run this. And I want to make sure people really understand that people, oh, well, I can just do that. There are very, besides your ACA membership, which is going to be the cheapest thing you ever have in this group, whether it's attorney's fees, whether it is a Zoom account, whether it's SurveyMonkey, all sorts of things. You might have your local community development things you want to participate in. So building a budget, understanding what you want to do, and making that fundamental decision. Do I want a network? And there's huge advantages to a network, people who want to make their own decisions and everything else. On the other hand, it's herding cats. It's harder for new investors because typically on an individual basis, they have to invest at least $10,000 in each deal. And in some markets, that's really hard for people to do conceptually. It might not be physically, hard. All of those are questions as you start this that you need to really ask yourself. Are there any key questions about the original startup process, Margie, that we haven't covered yet that we should cover before we move on to sort of?
Yeah, absolutely. Yeah. So thank you. It seems that, we saw your questions come in advance and also today, it seemed 3 categories: member recruitment, which we've talked about, kind of fund and organization nuts and bolts, and deal flow. So a couple questions coming in, and again, we have some similar questions. So I'm kind of synthesizing in terms of, when you choose a fund model. Let me just read this one. When you choose the fund model, does that change anything about the types of companies you end up investing in? What are your thoughts on structuring management fees? Maybe also just some clarification on membership structure, GP versus LP. And again, I want to say that 90% of the questions I'm seeing, we already wrote in the book. So if we don't get to them, we will get to them. And thank you for some people. Shout out to Scott Jacobs and others. As we're talking, and Skip says, as Christine and Elaine are talking, I see everybody on this call, from people starting an angel group to people who've been doing this for numbers of decades. So feel free to, those of you veterans in the room as well, feel free to put your comments to everyone so that we can continue to share as much knowledge as we can in our next half hour.
And that's the strength of the ACA. I mean, really is having that network of people who've been there and done it before you. And so that's what we leaned on a lot and continue to. And really our best deals came from our syndication within we have something called the Growing Women's Capital Group with ACA, and some of our best deals. And then we've been able to syndicate out many of our companies just to give them a much wider audience for potential investors. So several syndication groups we have. One was focused on impact, which I was also involved in. There are angel leaders groups that are great focus groups just to, bounce all your problems off each other and get advice, so it's just that network has been so important to us as we kind of here in, mid-sized city, Chattanooga, Tennessee, just did this thing that we didn't even really know that a lot of other people across the country were doing, until we kind of saw further research, started getting involved with Golden Seeds and a bunch of the other groups. And while I've been at ACA, Elaine has been there longer than I have, but just in the past 10 years, we went from about 5% of angels who were women to over 35% now, and just women starting funds and networks all the time. So it's really catching on, and that was exciting to be a part of. But there was a question there about what's been the hardest part, and I think there are hard parts at different stages. So the recruiting of investors is often where I get the most questions. Like, how do you start that? How do you do that? And I think a key piece of that is gathering the right leadership team around you who all have different Rolodexes. So we just had a giant Excel spreadsheet. Everybody put prospect names in there. You don't necessarily know if all your prospects are accredited investors, but you weed them out over time. You can't do public solicitation according to the SEC. So you do have to be careful about, kind of too widely. You can't put up billboards everywhere and let them know that you exist, but you can have a web page. And then you have to vet people as they come through and see if they're accredited or not. And that the accreditation rules have changed slightly. So there's also the sophistication rule and not just the money rule. But you want to protect yourself, right? You don't want a whole lot of unaccredited investors in your fund, because the SEC, I guess they could come after you. I think if you're
You can go to jail.
Christina,
You don't want to do that. You can go to jail, and we don't want to do that.
Yeah, exactly. So yeah, I think there's a lot to that. And emerging managers, whether it's a lead of a network or a fund, that is the hardest thing. If you're a first-time fund or network manager, it is hard, but it is all about social capital. So you want to go deep in your networks. You never know who's out there who might be interested. We thought a lot of women who were very philanthropically active and had a lot, of resources would be the most interested. No, it turned out the women who had been in business, built their businesses, were lawyers, were accountants, who understood business. They got it. They got the opportunity, kind of arbitrage opportunity. We used to say with, people weren't investing in women-led companies. So we were going to do it. We were going to be first to market in our area region. We just focused in the Southeast, and we had a lot of great deal flow. So deal flow wasn't a problem at all. It got better when we joined with ACA and were able to kind of merge some syndication efforts. We got better companies in our second fund as we got more sophisticated in our due diligence practices and our outreach and all of that. But I think recruiting investors is the hardest first hurdle. Elaine has a nice situation where she had a group that really was active who wanted to come into the fund. We didn't have anybody who'd ever done this before, women who'd ever done it before. So, first out of the gate on that, but, we now have just a very loyal, committed investors that have seen us through since our startup days, really.
Part of the other difference is 10 years ago, there was just not as much conversation about this when you first got started. And nowadays there's a lot more conversation. There's a lot more interest. The ACA is actually a lot more active in terms of just raising the awareness of what is this thing called angel investing. Our friend Marcia Dawood, who's the former chair, does this talk on bringing in new angel investors. And what has been interesting is the economic development people. If you're in a market, almost everybody is talking about startups and there's funding from the Department of Commerce and others. There's been a whole series of grants that are out there to help people start new funds. So the environment is very favorable. One of the real challenges we had, and Christine, you talked about that with your first fund, this is our first raise as a fund. So, and this team and everybody can say, so what has your results been? What has your exits been? And first of all, we don't have a predicate group. RTV Capital was a fund and Triangle Angel Partners was there, but it was, again, not exactly what we were doing, but we would talk as individuals, what we had done, what we had, how many of our companies were still running, which was really a key thing for us because it takes, if as an angel, even as a fund, this fund is going to run multiple years, and we don't have a lot of quick exits or a lot of really big exits. And so you've got to have out how many are still active, how many have grown in terms of value. And you've got to be willing to sort of invest over time and look at that. And we also played to the fact that the fund would only be as strong as the business expertise of the people who are in. So we are working really actively to diversify the knowledge base of who is coming into the fund and having them leverage their expertise as we do due diligence. I mean, this very much is a member participatory fund, which is how we talk about that. And so getting those people involved, feeding their ego, and going out and saying, hey, look, we better have some people with med device expertise. We better have people in our market. We've got a lot of ag tech. So we want to make sure we have ag tech people. And also building a community, and particularly for those of you who are in market where people are moving from maybe their second career or their post-corporate career. Part of the reason why we are keeping RTV Capital open is so once the fund closes, and most funds have a closed, a fixed base, we can bring new people into the community. And that's really important to us.
Yeah, somebody asked about, well, the grants issue that Elaine was talking about. The EDA issued a series of grants last year for fund formation for emerging fund managers that was pretty specific for BIPOC, directed toward BIPOC founders and women. And some, basically underrepresented, it could be rural. So some underrepresented areas that aren't getting enough funding. There's a lot of strings attached to all those, but that is something to pursue if you're doing a very kind of more of an equity focused fund or impact focused fund. There was another person who talked about the risks investing in startups. I think, if you join ACA, that's all we talk about, but, the stories you'll hear, but, where most of us are investing at a very, very early stage. So it is very, very risky. We do hang a lot on the founders. And so a lot of vetting and diligence on that founder is important. But, this is a lot like gambling. It really is. In a lot of ways, because everybody, you can have a portfolio of 20 companies, and maybe 1 to 3 might really make it for the whole fund. So it is a pretty risky business, and you have to be able to share that with potential LPs at the same time trying to get them to commit money to it. So you've got to be very upfront about the risks involved in this, and the potential for returns. But I think we could have a whole course on how risky startup investing is, but it can also be very rewarding. And a lot of us as angel investors, and not necessarily VCs, but VCs get into it for similar-ish reasons. We want to help. We are interested in supporting young companies. We are interested in supporting innovation. For us, we were interested in supporting women as business leaders and growing basically their economic power. So, there's a lot of mission behind angel groups and angel funds. Somebody asked, what about the word being a fund is, basically you're a VC. So yes, technically we are venture capital funds, but because we really invest alongside angels and we have much more of a mission like an angel group, we consider ourselves angel funds. So we've always, there's been a lot of back and forth on the names there, right, Elaine?
Well, yeah, and I was going to say, so it ends up our fund administrator is actually from one of the leading sort of early stage, more traditional VCs in the area who decided not to do that. But I think I want to reinforce something you said, Christina, which is that most angels, many angels, invest as much time as they do money in this, okay? And there is that active role in trying to help build these companies. Not everyone will be involved in every deal, but where you have industry expertise, you really want to share that, so when we do a med device company, we go to one of our members who really knows a lot about that kind of med device, or we're doing some stuff in consumer packaged goods right now, which happens to be my strength. So that community and that wanting to do something more than, just sort of passively put in money is really a lot of the motivation of people wanting to be engaged. And while, yes, it is risky, okay, we have learned a lot over the years that there are ways it's knowledgeable risks. So we know, for example, if you have on average over a period of time 24 or more investments, there's a high probability that you will get a decent return, at least what you'd get on the marketplace. The reality is, yes, only 2 out of your 10 investments are going to return 90% of all your return to your, whether it's a network, your own personal portfolio, or a fund. And yes, if you knew day one which ones they were, you would only invest in those 2. But guess what? We don't know. So you have to look at every single investment and say, does this have the potential? Does it have the potential to scale? And one of the hardest things as an angel is to separate out, is this potentially a great idea, a great company, from is this a great angel investor today at this valuation with this set of terms and everything else? So it is a little bit like a Rubik's Cube. You got to make all the pieces fit into it. And no one person alone is going to do this, I believe. This is very much of a team sport. And there are no stupid questions. One of our big hurdles in talking to new members who haven't been angels before is, oh, I don't know enough. And I go, look, do you know how a company makes money? Do you know how to ask a question? There's no such thing as a dumb question. And I have been in, 3/4 of the way through a pitch, and I have to say, hey, stop. What do you really do? Or give me a use case, or how do you make money? And people might say, oh, well, that's so basic, I shouldn't. Well, and then you find out everybody else in the room is thinking the exact same thing, but they haven't asked the question.
Elaine and Christina, get to the point of, angel investing being a team sport. We talked about recruiting members, talked about social capital with finding founders. There's some interesting questions on the chat, and both of you work in states that have Tennessee and North Carolina that are very active in supporting angel investing. So just a quick overview of those of you on the call representing state entities, or some examples you've had in working in your states with other entities in your community that can support all these efforts.
Yeah, I mean, being part of your local ecosystem is key, whether that be at your own city level or state level. So it kind of depends on how active your state is. At Launch Tennessee, and then our own Department of Economic Development are both heavily engaged in really helping grow the startup economy here. Some of the state itself entity is pursuing some angel investor education, actually, with ACA, and then Launch Tennessee has its own, has a statewide event every year called 3686. It's hosted in Nashville. They have their own fund that invests alongside angel funds and VCs in the state, and really just trying to bolster our startup economy here. So it's really important to plug into those efforts. There might be something happening at your university. We have a network of 7 ECs and entrepreneurship centers, and we have one here in Chattanooga. And so each major city in Tennessee has its own entrepreneurship center, and they're really, they get people kind of from walking in the door to high growth ventures. Ours right now is focused on mobility, so it's actually on like electric cars and new forms, just kind of emerging technology around transportation. We have a huge logistics network here in Chattanooga with a lot of large logistics companies, and so they're helping fund that effort and really driving a lot of the innovation and kind of think tanking around those things. So interesting companies popping up through that. and we've had some success stories here in Chattanooga. You would never, I mean, you might not ever know that, but some pretty big. We've had Bellhops, which is a digital basically logistics platform for moving, and some other Access America and some other ones here that have really blown up. At Freight Waves is another one. So you know, dig into the ecosystem, find people through that. We have started up now a chapter of Venture South here in Chattanooga as well, which is one of the angel groups that's already operating in the Southeast and definitely in the Carolinas as well. And so you could, you know, always use an existing group like a Venture South to kind of seed a small group that you're working with locally, that has the infrastructure behind it, has all the, you know, the diligence process, everything, and you're just kind of starting your own chapter. That's how some people with Golden Seeds did it as well, started chapters in different cities. So there's the opportunity to do that if you're already kind of understand what that spider web of your ecosystem looks like. But I think at the state level, it's really important. I mean, it is hard to just kind of be out there just doing it yourself. But there are a lot of resources being funneled through states right now that you could leverage for your own angel group.
Yeah, between each state has their own bias. And one of the things about the EDA grants is each state then wrote all their own rules. So you have to really go and check at your own state. And you also have to, this is an ecosystem. And you really have to look at it that way, whether it's across a state or across a region. And you want to work with others because of the sheer reality is for most companies, they are not going to be funded exclusively by any one angel organization, everything else. The typical, you know, startup, if they're raising a couple $1 million, they're going to have probably 3 to 4 minimum investors. So you really want to build these networks. You want to feed. We have a very strong, obviously I'm here in university heaven where I've got 3, you know, I've got University of North Carolina, I've got Duke University, I've got NC State University, we've got several other smaller universities. They all have their own angel groups, which really leverage that broader community. We have a group that's very much focused here on called NC IDEA. And they are a private foundation, but they really provide the money even before you get to an angel. They are the ones when you just really have a concept. So they sort of feed into us. We also help mentor and judge what they're doing. And that, again, helps us with deal flow. So that's not, if you are out and about and you leverage the resources in your community. Most markets have a small business technology center, again, which is an offshoot of both the state commerce departments and the U.S. commerce departments. Really look around, look at what's working, look at what businesses are successful in your marketplace. And they have feeders, you know, we have, you know, obviously IBM and others here. We are the center of clinical research in the world, really, here in the Triangle. So you leverage what you have and what you know. You know, I see Margie just posted, it's true. We have a huge number. We probably must have 20 or 30 more angel, you know, university related groups. And those aren't just, these aren't students, these are alumni and they're broader groups. So you want to look at your community and think of it as a puzzle, and what piece can you add to this puzzle, you know, that really closes that loop, that adds something unique of value, that brings together a set of resources, and that does it in the right way. You know, one of our big focuses on why we're focusing on such early stage companies is because we want to write the term sheets. We are concerned that some of these, you know, term sheets are not being written. You know, people hear a lot of publicity out in the West Coast about, oh, we use the safe for everything. And other people don't feel as strongly about that. But if we can have a fair term sheet to an entrepreneur and to the investors day one and help that company get started, we are doing so much to make this a better place for all of us. We have about 10 minutes left, Margie. Are there questions that we haven't answered or that people just want to put in, to chat, burning issues that we haven't addressed yet?
Yeah, I mean, I think there's some nuts and bolts issues I know are in the document that are probably better read through and reach out to us with further questions. Because again, as you read the document too, if there's gaps of FAQs, this chat is a nice FAQ of what we can put in our face too. So this has been wonderful for us. I think if anyone has other things to put in the chat, we're going to send some follow-up emails, but I'd love to hear from Christina and Elaine and also our experienced angel operators listening in on, what you wish you knew, and just encouraging thoughts for any new operators on why they should do this. As Christina said, she's not getting paid right now, so it's a labor of love.
Carrie. Better be good.
Yeah, and we're not getting, the management team, the 6 of us are going to share a little bit of the carry. But that's it. The only person getting paid, as I said, is our administrator, and he's getting paid just a little bit of money because there's a lot of mechanics. I guess
Final great question too on, again, you have this initial burst of enthusiasm, everybody excited. So maybe what you wish you knew, words of encouragement, especially to keep member engagement outside the first bunch of check writing.
Well, we run monthly meetings. We have monthly dinner meetings. And I've got to be very careful when I say that, because then people think, oh, crap, you're a dinner club. And that's not it. But having this community aspect of it and keeping members engaged and reaching out to a specific member, we need your expertise for, is something that we have learned along the way. The other piece to me would be, we do a newsletter quarterly, again, to try to keep people engaged. And you're not going to keep everyone engaged. Just recognize that. And you don't necessarily want everyone engaged all the time, okay? But you do want to be attentive to people, and you do want to be active. I guess to me, and this is where the Angel Box is, sort of the sheer mechanics of getting everything done in terms of getting the capital calls in right efficiently, getting the, when you do a fund. When you have a network, you don't have to deal with these issues. But when you do a fund, you've got a lot more legal issues. And I think that is the key thing. The other thing is to recognize that this is you've got to be very transparent, because there are inherent conflicts of interest. You're an investor in one company, and you might be having another company coming in and presenting. You might be in, people have multiple relationships, and you're only as good as the people that you have in your fund. So don't think about who you're bringing into your fund and not just the dollars. I mean, one of the rules we made, and it's not written down anywhere, but it's talked about, no jerks allowed.
I like that.
And it was important to us, because we also have one of our mission statements is not, obviously make money, helps the entrepreneurs, but have fun is really important. And, I would caution you not to go do an angel fund. Unlike some of the large VC, you aren't doing this because you want to make money as a fund manager. It's a really tough, difficult.
You're not for VCs. Yes. Yeah.
And that's really important, because people think they're going to make money at this, and you really, it's really hard to do that.
You can, but
let's hope eventually with the carry.
Yeah, and I think also engagement for us with our groups, really education was really key. So we would kind of focus different sessions around some piece, and then engaging. So at Next Wave, what we did is, the way we engaged the LPs was they could sign up for diligence teams. So if a company rose up to the point that we were actually going to move them to the next level and do full diligence, there would be a lead from the investment committee, which were the 9 women from across the country. And then LPs would join different aspects of that committee if they were really interested in the company. And that was a terrific learning process and a really great way to engage folks, a wide variety of folks with a lot, as Elaine says you have a lot of expertise among your LPs. And we do that. We also bring our LPs, we aren't deal sourcing anymore, but when we would bring our LPs in with expertise in particular areas to listen to the pitches or to do our deep dives. So, I mean, one of the things I think is just that early understanding good best practices in diligence, because it is pretty well proven. Ron has some statistics, our chair now, and you'll learn this in ACA courses, that the more rigorous diligence you do, not overly, you can't do diligence forever. You can't diligence yourself out of complete risk, but the better diligence you have early on, and really having a method and having some rigor to that, you are going to de-risk your investments. It's just been proven, like the more diligence that you do. So that, to get that right at the beginning, that is something that we, I think, got better at over time. I mean, with our first fund, we were really, again, didn't know what we didn't know. And we really honed our internal process. And I think our second fund is so much stronger for that. And I think also we had to start our second fund pretty early because we didn't keep enough follow-on capital in our first fund. Our first one was very small, it was a $2.5 million fund. So it was a literal proof of concept fund. Deployed the capital really quickly, and knew we had to keep some back, but you run out pretty quickly. So the second fund has more companies that were more mature, that we invested with the second fund. We were able to actually do some pro rata in that, and that portfolio is just a lot stronger, with experience, with better diligence, and with being able to follow on companies that were already progressing along and had been de-risked through that process, right? The ones that weren't going to make it, fell off in the first year or two. I think the other thing is just time. So the time, if you are in a fund, and we're talking a lot about funds, I know, but in a fund, there is a long timeline. And you have to be committed to not only the 10 years of the fund life, but possibly the 2-year extensions you have. So they're usually like 10 years with 2-year extensions, or up to 15 years, right? Each fund. So if you mark that out after your second or third fund you're going to do, people usually have vintage funds. That's a lot of time to commit, especially if you're not doing this to be paid. So just kind of go in with eyes wide open on that. The network is a little different, but you have investments that you might be in also for 10 plus years. So, somebody's got to be paying attention to them. Somebody's got to be doing the reporting on them. I mean, there's just, it kind of just goes on forever after the first 4 years of the investment period is done. So,
yeah. And one of the
a lot of harvest, there's kind of this dull period in between.
Yeah. One of the pitches for some people, for funds, and I still love the network model, but for the funds is, should the time elapse so that it becomes part of your estate? It is easier to manage the one investment in a fund than it is in all the individual investments. Okay. But understanding it is a long investment. So these are more like marriages than they are like quickie dates. So think about who you're investing in and the kinds of companies. And also, don't get discouraged, because your losses will come before your successes. I know, in going back to RTV Capital, when we started as a network, probably in our first 3 years, we disproportionately had, a lot of companies start and fade fairly quickly. And yet now we're into it 13 years, and over 70% of the investments totally, and even a greater percentage that we have made in the last 5 years, are all up and growing and doing things. So don't get discouraged. It's a little bit like swimming. Jump in, make sure you know at least how deep the water is, but jump in, don't do it alone, and and have fun.
And read AngelBox and read through AngelBox so that you
read through AngelBox,
not make some
read through it. We really did, it was a team really at the ACA, directly from ACA members. VentureWell was kind enough to give us the funds to support this initiative, and we really do thank them for that. But it's ACA members investing time and energy. And somebody I actually have to mention who's not on this call, Sarah Dickey. Sarah Dickey and those of you who don't know, Sarah Dickey is Director of Membership. We probably talked about AngelBox for at least 4 years before we even got started finally putting it together. So this is her vision come true, and then fortunately we were able to hire Margie, who really was able to bring this to fruition, with support from VentureWell. But this is truly, it's a good part of the education process because we are absolutely committed to making this as useful as possible for all of you. We want it to be used. We want it to have a lot of we want you to share the knowledge and make it all work. So please, don't forget to reach out and ask questions. Go to ACA Connect and talk about this, and use the tools and help us make it better.
Great. Well, I cannot, Elaine, Christina, I cannot thank you enough for helping us out today. It's great to see people that I knew, made some new friends as well, captured a lot of great emails. You all have mine. So we'll follow up with some different recordings with more access on how to get this. Feel free to reach out to me with any questions that you have. And happy building, growing, expanding your angel groups, doing deal flow, and stay tuned for all the other great stuff that the ACA is doing in the fall. Elaine, Christina,
Thanks, Margie.
thank you.
All right. Thank you all for attending. Bye.
Thank you so much. Have fun.
Wonderful to see some international people as well. So we'll hang on a minute or so if people have anything else to put in the chat. But for everyone else, have a wonderful rest of your day. Goodbye. We usually just wait a second. Thank you, Elaine. Okay, Annie, I think we're pretty much good to go. We never like to cut anybody off midstream, but
Sorry, I left off.
no, that's okay. We usually wait for we never want to cut anyone off with midstream, but I think
I think we got most of this. The feedback, Margie, I hope you're going to get the transcript because I couldn't be reading.
We did. Yeah, no, we got the chat. Yeah.
Yeah, no, there were some great questions, great comments in there. But I did want to make sure that we had a call out to Sarah because she worked so hard.
Oh, yeah.
So long.